Good morning. Paul Georgie from Allendale. It's November 19th, Tuesday morning, and hoping for a turnaround Tuesday in the grain markets today. We are a little bit higher in corn and wheat at the moment. Soybeans about unchanged. The USDA yesterday says we're 91% complete on harvesting on corn as of Sunday. That compares with 86% average. Soybeans 95% complete versus 96% average. Wheat conditions for the winter wheat, 63% good to excellent. That's down 2% from last week, but above the 52% average that we normally have going into dormancy. We did see big funds selling yesterday. They sold over 12,000 contracts net in the corn market and about a 1,500 contract net seller in the wheat, buying only 4,000 contracts of soybeans. Some of the other news that we're watching here this morning, Brazil planting progress seems to be going well. Weather down there is still very favorable to the planting and early start to the crop. Some of the local analysts down in Brazil are starting to project the production numbers for the Brazil crop. Soybeans, they've got a range of 86 to 89.5 million metric tons of soybeans possibly produced this year in Brazil. Corn, 70 to 79 million metric tons. Now that's a reduction in corn production from this last year, and that's because they're expecting about an 8.4% decline in planted acres. So we're going to be watching that very closely as we move forward. The weather favorable certainly right now, but the any kind of blip and change in the weather conditions down there could create some excitement, and that's what we certainly need to get some strength built back into this grain market at the Chicago Board of Trade. We had announcement or speculation yesterday that China was rejecting cargo of corn because of GMO contamination of a GMO corn strand found in that cargo that was not legal to come into China. So that was a concern and another bit of fuel for the bears yesterday, and a reason to sell off yesterday during the session. Expect choppy trade as we move forward this week. We've got option expiration for the December contracts on Friday. There's still a very large open interest in the options, with the $4 strike seeming like it's an area where the market wants to gravitate to going into that expiration time. In the livestock trade, under a lot of pressure yesterday. Technical selling, major factor. We had held strength and consolidated for a period of time. Couldn't break new highs as we go into the Thanksgiving holiday and the live cattle, and that caused some profit taking yesterday. We've got poor margins at the packer level, even though they paid $132 for cattle last week. Product continues to deteriorate. We had cutout values for choice beef down 60 cents yesterday. Select was up 127. Pork cutout values were up 71 cents yesterday, and the struggle that we have in meat is because of the Thanksgiving holiday. The retail counters are getting smaller for the featuring of pork and beef as turkey takes its space going into this Thanksgiving holiday. Now there should be some fill-in buying here late this week, early next week, as retailers prepare for their post Thanksgiving featuring of beef and pork, but that is the thing that we're waiting for, to see some strength in this in the product to help out the margins for the packers and ultimately help support stronger live cattle and hog prices as we start the the month of December here in just a few weeks. So those are things we're watching here at Allendale. A lot of things going on. Reasons to stay in touch with Allendale's research at 800-262-7538. We wish everybody a very successful trading day, and I'll talk to you tomorrow morning. Thank you.